from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And every Monday morning I go through what happened globally around the world and try to forecast what we may see this coming weeks. I'll show you how investors and traders may make money on the stock market. I'll show you what is hot and what is not, and what you should hold and what you should fold. So enjoy the presentation, and if you have any particular feedback, we would really appreciate if you give it to us. From around the globe, we start with the Dow Jones Industrial Average Index, which makes up the top 30 stocks, which you can see here. On Saturday morning it was down nearly 1%, 256 points, and finished at 25,865. Remember that during the day on Friday night our time, the Dow was nearly down 1,000 points and managed to recover 3/4 of those losses in the last 2 hours. The broader S&P 500 was down 1.7% at the end, 52 points lower, and the Nasdaq Technology Index was down 1.9%, was about 4% lower earlier in the day. In Europe, the StoXX 50 index, which comprises most major European markets, was nearly down 4%. In London, the FTSE 100 index was down 3.6%, and in Germany was down 3.4%. In Japan, the Nikkei index was down 2.7%, and in China, the Shanghai index was down 1.6%. On our market on Friday, we were down nearly 3%, 179 points, and we finished at 6,216. And by the way, the futures this morning are showing that the market most likely will open 93 points lower, 1.5%, to 6,113. And gold on Saturday morning was trading at 1,674. West Texas crude oil was trading at $41.50, and that is the lowest level since the global financial crisis in 2007. And the Australian dollar will give you 66.4. That's according to what we've seen on Saturday morning. 58.7 euro cents, 50.9 British pence, and 104 New Zealand. Now let's have a look at the big picture. We can see here that the Dow over the 1 week was up 1.8%. But don't get too excited, because when we put last week or the week before, we find that the market was still down nearly 11%. And the Nasdaq Technology Index was still 10.5% lower, and the S&P 500, the broader index, was down nearly 11%. And by the way, the Australian dollar managed to recover 0.2% over the last 2 weeks, despite a good gain last week, which took the Australian dollar to 66.4. Okay, and in terms of gold over last week was up 87.6 US dollars per ounce. However, when you compare what happened last week with the week before, combined, the gold price was up 1.8%, only 29 US dollars. And silver, despite the gain last week, over the last 2 weeks was down 6%. And West Texas crude oil was down 22.4% over the last 2 weeks, $11.96, let's call that $12 US per barrel over the last 2 weeks. That's not very good. And soybeans was slightly up over the last 2 weeks. Now, just a matter of interest, when this was actually, I presented that a week ago, and I said that compared to not last week but the week before and the week before, in other words 3 weeks ago, the market was down 13.6%, a little bit of recovery last week. Look at our market at the closing bell, and over the full week our market was down 3.5%, 225 points. It closed at 6,287. And if you look at our market over the last 2 weeks, we were actually on the All Ordinary, that's the top 300, we were down 13 points. And if you look at the S&P 500, sorry, the ASX 200, we were down nearly 13%. So, and by the way, our market over the last 2 weeks were actually showing that we were actually in a very bearish market. Our ASX 200, that's our gauge, is made up to a great extent by two major sectors, the financial and the materials. Between the two, that actually drives the ASX 200 by nearly 40% of its components. Well, as I mentioned, our ASX 200 over the last 2 weeks was down nearly 13%. Look at the financials. The financials over the last 2 weeks were down nearly 17%. So if you have banks, stocks, well, obviously you didn't do very good at all. If you have BHP, Rio and Fortescue, the material sectors, down 12% over the last 2 weeks. Okay, now look at the stocks. What we see here, that the best stock over the last 2 weeks was actually Newcrest Mines. Because of the gold price going up, we find that we had a good week on Newcrest Mine last week, nearly 11%, but when you combine the 2 weeks together, we were up only 36 cents or 1.3%. All the other stocks were actually down over the last 2 weeks. Telstra has recovered a little bit thanks to the ACCC deciding not to contest the ruling about the merger between Vodafone and TPG, which is likely to go ahead. Now there is nothing that will stop it. And Telstra, of course, on the back of that decision, managed to gain 3.5% last week. Over the last 2 weeks, Telstra was down 5.1%. You can see here the worst stock, looking at anything that starts with 2, AMP down 23%, Bramble down 25%, and Woodside Petroleum down 20.5%. Santos, again because of the oil, was down only 15%, did a little bit better than Woodside Petroleum. So what do you trade? I mean, beside gold, I mean, are you expecting gold to hit the roof again after reaching, look, over the last 2 weeks, you know, we had a terrible week 2 weeks ago. The reason why it went from 11% down to 1.3% over 2 weeks is because the week before we had a terrible week. And how you want to see that? Well, it's not important anyway, because look at the Dow Jones chart. This is actually 2 weeks ago. We had a very bad 2 weeks ago, and last week wasn't any better. It actually went all the way. It was very volatile, got up to 27,000, but finished at 25,364. If you look at day by day, out of the last 2, 4, 6, 7 trading days, we had 4 green and 3 red. So we just probably finished exactly where we finished about a week ago. But still, you know, it's still lower on a week by week when you consider that. Actually, week on week, we've had an improvement, didn't we? Going back to what I showed you here, we had 1.8% increase. However, over the last 2 weeks, nearly 11% down. Here we go. From that point to that point, 11 points lower, and we had 1.3% rise last week. Look at our market. Again, we're going back, that's actually 2 weeks ago. Now, we like to look at volume, and you can see that over the last several days, we've had only 2 positive days where the advances exceeded the declines, but every other day we've seen the declines showing a lot higher number than the advances. However, the good thing is at volume, 2, 4, 6 ago, when we had 61% of all stocks declining and only 8.67%, we had a huge volume. the highest volume in many months. And then people started to believe that maybe up down volatility. People now are sitting on the sideline waiting to get more confirmation. However, today the market is likely to open 93 points lower. Okay, looking at our mechanical system, which from the indicators we're able to look at the indicators and predict, more or less forecast what we may see in the coming weeks. Well, you can see that 3 weeks ago we've had neutral on the Dow and bullish on the Nasdaq and the S&P 500, but the last 2 weeks you can see it's gone from bearish for the conservative trader all the way to the aggressive trader, and now the investor is going to actually take a view that according to the indicators that we are bearish. Crude oil very bearish, gold very bullish, especially at the end of last week. And on the daily side we've seen that the last 3 days gold started to actually move into the bullish side, and West Texas crude oil remain on the bearish side. Again, the indicators that we have used on our mechanical system that we have designed about 20 years ago, we continue to improve it and to backtest it. We can see that according to indicators, and some indicators are leading and some indicators are lagging. So sometimes it takes time to form a particular forecast. Now look at our Australian market. You see the last 2 weeks we ended up from bad to worse, and you can see here where we reached at one stage 7,200. Actually it was much higher. Our highest market was 7,200, and from that point onward all the way down. We might see a green candle in the next couple of days, but we are in a bearish trend. And when we use the indicators, just to give you an idea, the parabolic stop and reverse, that's the dots, the red dots in here, that's bearish. The crossover, the 9-day and the 21-day, the 9-day is below the 21-day, that's lower. Stochastic is lower, and you look at the other indicators, they're all more or less, all of them on the bearish side. We combine the weekly indicators with the daily indicators to form a particular forecast. Not only one time frame, we look at 2 time frames, and for the investor we look at the monthly and the weekly. And if you want to learn how to look at indicators and determine or have an idea about possibility of the market moving in one particular direction, all you have to do is talk to us and we'll teach you how to do it. The other thing that we look at is volume. We have 50 period moving average volume. Here we have the weekly average volume, and you can see here, for instance, let's take a company called West African Resources. The volume over the week was actually around 9.9 million shares, and last week, guess what? We've seen the market with 11.7% increase in the price. Despite everything that's going bad, we had huge volume, 43 million instead of the 10 million that we have on an average. So the price is up, volume is up above the average. That is a good indication. On the bearish side, obviously you got heaps. This company Hub24 down in the price by 21%, and the volume was nearly 617% above its average volume. Average volume 1.4 million. Last week we've seen 8.7 million. If you want to learn about what's happening here and you want to get a copy of this slide, all you have to do is talk to us and we'll give it to you. Now look at the daily volume. On the daily volume, what we see here, nothing on the upside, nothing on the upside on the mid cap. The top section is the top 50 for the conservative trader, and the bottom side is for the aggressive and the very aggressive trader, the mid cap, the small companies. Now you have a lot more companies on the downside. For the mid cap, NAB was down 5.5%, and look at the volume, 16.7 million shares transacted on Friday versus an average of 6.2 million. I showed you before the average weekly, and now I'm showing you the daily. So you combine the weekly and the daily and you start to form an opinion about what's happening. If you want a copy of this slide, again, talk to us and we'll give it to you. As a matter of interest, for those people who look for dividends, these are the companies that actually going to go X date. And of course, if you have any of those companies, then obviously the price will drop by the amount of dividends, and you never know, it might recover a little bit above the dividend payout, or it might even go worse. In terms of people who look for percentage gain in dividends, we've got here for the last for the next few weeks, Regis Healthcare is offering 7.8% yield. That's a very good return on your money if you have this particular stock. Finbar Group, Parenti, you can see all those companies offering very nice yield. Now, in terms of our trades for our CFDs, you can see we've actually been trading in and out, in and out, in and out. Like for instance, on the 7th, we had 3 trades. Australia, that's the ASX 200, and you can see on every day of the week we were actually in and out of the market, some losses and some gains, but overall we are actually happy with the way we traded. And we show you what happened before and before and before, and we show you every single trade that we have traded, so you can have an idea about how we trade CFDs. And of course, CFDs is a very risky avenue to trade, so you need to learn how to trade it, and before you go take any action, please consult with us. This is our disclaimer. There is no guarantee that anything we said today will guarantee you profit, so we have to be aware of the risk and reward, and everything we said today is of only general advice only, not personal. And if you have any questions, all you have to do is ask, and of course this is our contact details. So if you want to write to me, george@fssecurities.com.au, or you can call me on my mobile. If you're ringing from overseas, 61 for the country code, you don't need the 0, 61 411 259526. And of course, if you're ringing locally from Australia, it's 0411 259526. Happy trading, and of course it's a lot of fun trading, but you need to be aware of the risk and reward. Have a good week, and I'll talk to you again shortly.